What's up, traders? Welcome back to the Liquid FX YouTube channel. Here we're going to be going over one of the most important concepts within ICT concepts itself, and that's the idea of premium versus discount. Now, what do we mean by premium versus discount, or PD arrays? Okay, so if we take this to the side, if we take the chart to the side for a second, we just look at PD arrays by itself. PD arrays have a very simple concept, right? But it's about applying them to the charts that really allows us to become profitable and prevent a lot of losses, right? We can prevent a lot of losses from understanding PD arrays. So how does it work? So let's look at a bullish scenario first to the left of your screen, right? We're in a bullish market. We're very clearly going to be seeing new highs get formed and old highs get broken, right? So over here, we see a very clear structural break, right? So this arrow here represents a break of structure, or simply a BOS for short. Now, once we've established a correction in price, right, we need to understand where we're going to be looking to buy from, right? Where's our order block going to be, right? So it's important to understand a few things, okay? So it's important to understand that we should not try to anticipate a top, right? So do not pick the top. You do not want to be picking the top. Now, the reason for that is because a retracement is very difficult to catch when you're looking at things from a trend point, right? You're better off following price, and the way to do that is not to pick the top. So you don't want to be picking the top. Our job is to sell at certain areas and buy at certain areas. So if we're bullish, we want to be looking for buys, but the question is, where do we look for our buys? Okay, so if we just bring price downwards again like this, and we see a reaction up here, so we're looking to buy this expansion over here. So we're looking to buy this expansion, right? We're looking to buy this expansion. So where do PD arrays actually come into play, right? So PD arrays come into play when it comes to understanding which region we should be looking to buy or sell from. So using the Fibonacci tool, or the Fib tool, or like I call it Liquid FX, the premium and discount tool, that allows us to more accurately project areas to buy from, okay? So this is how we do it. It's very simple. You take the Fib tool and you project it from the swing low up to the swing high, right? And as you can see over here with the Fib settings, these are my Fib settings over here, nothing fancy. You only need the 0% level, or the 50% level, or the 0.5 level, and you need obviously the 100. These are the only three numbers you need to be successful with ICT concepts, right? It's understanding premium versus discount, and here's how we do it. We project the Fibonacci tool, or the Fib tool, from the swing low up to the swing high over here, right? So if I just zoom in price, we can have a closer look, right? We project the Fibonacci tool from the swing low up to the swing high over here, right? So if I just bring that over to the right, we have a better look at price. We project it from the swing low up to the swing high, and I'll make that bold so people can see, right? So from this point, we need to understand that our order block, our high probability, our correct order block will lie in the in the discount if we're looking for buys, right? So this is going to be here in the discount region. So I'm just going to label that here, discount. Very important, right? We don't want to be looking for buys up here in the premium, right? We don't want to be looking for buys over here, because typically what will happen is we'll see price change character, but then come down anyway into the discount, then give us our buy over here. So in order for you to stop becoming the liquidity and stop getting stopped out, and have the market hunt your stops, or hunt your your stop losses, or whatever it is, this is the perfect way to prevent that from happening. It's to understand the areas of discount and premium. Okay, so this is very important to understand. Now it's the exact same but flipped on its head for a bearish scenario. So if we have a bearish scenario, we're going to have price create a low, a high, and we're going to see the low get broken. Now from here, remember, we don't want to pick this bottom. We're simply going to wait for price to get back into a premium, and then we look to sell, right? Then we look to sell. So what we're looking for is we're looking for a break of structure in this region over here. We project our Fibonacci tool from the swing high this time down to the swing low, just over here, okay? So this gives us our premium projection range. Our premium high is over here, right? This is a premium high in this region, right? Using the same tools, just flipped on its head. We want to be selling in the premium, right? And this gives us our high probability selling areas, okay? This is important to understand. So if we just delete all of this and we go to the charts over here, here is a weekly time frame of the euro dollar, and we're going to be going over most recent price action, right? On the week, I say recent, we're going back to 2018, but this is the weekly time frame, okay? How can we use the premium and discount tools to build a narrative in price? How do we do that? Now, this is very important to understand. So what we see over here is we see price come down. We saw price give a low in this region, right? We saw price give a low. We saw price come up, giving us a high, and then we had a break of structure over here. So our most recent dealing range, our structural dealing range, is from this high up here all the way down to this low over here. So this is our dealing range in price. So from here, we know straight away, it's very self-explanatory at this point what's going on the chart, right? What we see is we see price giving us a premium over here, and we see price giving us a discount over here. This is a premium, and this is a discount, if I can spell discount, okay? Great. Oh, and this is a premium. So with this in mind, we have to understand that the next thing we look for is a fair value gap. Now, I've been through this in previous videos on how to build a higher time frame narrative. If you haven't seen those videos, I highly suggest checking those out because those will allow you to build a direction in price. But now that we see that if I get rid of the discount, we're in the premium over here. We have our 50% level. This is the equilibrium, right? So this is the equilibrium over here. This is the equilibrium, or for short, the EQ. So the EQ represents the 50% level, or halfway between the structural high and the structural low. So now that we've seen this over here, we need to understand how we can use the premium and discount tool to our advantage to build a narrative in price. Now, when we have a fair value gap here in this region, right? So we have a fair value gap over here, right? So this is our fair value gap over here. If I label that in gray, we have a fair value gap here, and we have a fair value gap just above us over here. So what makes these fair value gaps high probability, and the reason why we want to be targeting them, is because these fair value gaps are in the premium. So look at how we look at how we've dissected this. We've gone from the swing high down to the swing low. So we've identified our dealing range. We've identified an equilibrium in price, which is halfway between the top and the bottom of the range. And from here, we've used our premium zone to mark out areas of interest, or POIs, or simply fair value gaps, areas that haven't been mitigated, right? So these are inefficiencies in price, and we use the fair value gap tool, or simply just a rectangle in my case, to highlight these zones. And these are areas that we're going to look to target because they're in the premium range. So this is how we use premium and discount on the weekly time frame. And it's the same for all time frames. This is important to understand. It's the same for all time frames. So from here, if we go down to the daily time frame, we can begin to dissect price action in the same way using our premium and discount tools, okay? So this is our daily structure. So here we're going back to 2022. And what we see here is the same thing, right? So we're looking for areas of premium and discount. And here's how we do it. First, we need to start off by understanding our structure. So our structure is understood just by looking simply at the highs and lows. So we see a low, a high, a low over here, a high, a low, a high, a low. Now from here, we've seen a structural break, right? So we've seen price break structure to the upside, okay? Now, because we're in a bullish market, we're going to be looking primarily at bullish dealing ranges, but this does, of course, work with bearish structural dealing ranges. You just simply apply it. You just simply switch the theory on its head. You just upside it on its head, right? So now that we have a high over here, we have a high up here, and we have a low over here. So our most recent dealing range with the current price action in front of us is simply going to be projected from this low up to this high over here. So this gives us our recent structural dealing range, or for this particular price action. Now it's important to understand we haven't had a discount for this region, so there's no discount. Now what does that mean if there's no discount, right? The fact that we haven't got discount means in the future we are likely to see price come into this region again, this sort of discount region over here, below this equilibrium level. And what gives us extra confirmation and confluence for that is the fact that we also have a fair value gap over here. So when we see a fair value gap, we understand that price has inefficiently delivered itself at that moment in time, and we've also not had a discount. So price is well within its rights to return to this region. So let's continue on, and we can begin to dissect our structure some more. So now that we've seen a structural high over here, which we dissected previously, we've seen a structural low, a correction in price, and we've seen a new high. So now that we have a new dealing range to work with. Our dealing range now consists of this low being projected up to this high. Now what do we see? Now we see a better example, clearer example of where a discounted low has been given, right? Let's zoom in price and have a look at something. We have a very clear fair value gap over here, right? So this is our candle or our area before a fair value gap, okay? So this is our POI or our fair value gap. We see price leave an inefficiency, okay? And price respects it by not, it's only the wicks that enter there. Notice how we see only the wicks that are entering. So the wicks give us an indication that yes, we see that price is respecting this fair value gap in this POI. If we were to buy from this region, our stop loss would be just below the POI, safe stop loss. And what we're going to do is we target the last high as it's weak in the premium. That's a 1 to 3 trade, everyone, using simply the daily time frame to your advantage. Excellent, right? So that's how we use premium and discount in a bullish market, right? Let's quickly go through a bearish example because we haven't really looked at that. Our last structural low is over here, as we established, right? So we've seen price giving us a low, a high, a low, and this low was responsible for breaking the last high and giving us a new high. Now from here, we see price simply break structure to the downside. So we see price giving us a break of structure over here. We know we represent that with a boss. That is our break of structure. Now from here, we understand we have a new dealing range, a new structural dealing range from the swing high down to the swing low. So this is our bearish dealing range at this region, right? So now what do we understand just by looking at this chart? We have, of course, the EQ over here, the 50% level, and anything above that is a premium. Anything below that is a discount. So what do we do as traders, right, when we use premium and discount to our advantage when you look at it from an analysis perspective? Right, what we're looking for is we're looking for areas of inefficiencies and weak structures in this region. And this is a bit of an EU outlook as well, euro dollar outlook. Because we have a fair value gap right up here at the top, we have an inefficient candle over here, and we have an inefficiency or imbalance over here. This is our fair value gap in the premium. Notice how this is in deep premium. Deep premium. So from here, what we know as traders that we want to trade from discount, because right now we're in discount, aren't we? We're in discount. How do I know we're in discount? Because we're below this EQ over here. This is the EQ, all right? This is the EQ in price or the equilibrium. Anything below that is discount. Anything above that is premium. So we want to be looking for potential buys into deep premium or just premium, targeting any fair value gaps in price before potential sales, right? So this is a quick overview of how we use premium and discount to our advantage. This is a euro dollar daily time frame, and we looked at weekly time frame. This can of course be applied to any markets on any time frames, whether it's higher time frame analysis down to lower time frame entry. Using premium and discount arrays allows you to essentially buy or sell at the correct price, so you're not overbuying or you're not buying at a price that's too high or you're not selling at a price that's too low. So it gives you an optimum stop loss placement as well, gives you a decent average RR in your trades, and prevents you from taking a lot of losses that you don't need to take, especially on the lower time frame when it comes to entry. Right, so for those who like this video, give it a like, give it a thumbs up, subscribe to the channel because there'll be a lot more source coming your way. I can assure you of that, and I look forward to seeing you all in the next video. So thank you, everyone.